The Aussie dollar has fallen to its lowest level in about 5 years, raising the price of imported goods and adding to the cost of living challenges for Australians at the moment. Joining me now is business reporter Edward Boyd. Ed, good morning to you. The dollar has fallen to its lowest level since March 2020.
Yeah, the dollar has really been on a downward trajectory for quite a few months now. And remember, we live on a big island here in Australia, and most goods that we buy are imported from overseas. You can see this is the intraday trading of the dollar right now as we speak. It's currently at 61.48 US cents. But if we go to the next page, we can see what it's done over the past 6 months. And you can see the Aussie dollar's almost down about 10%. It was trading close to 70 US cents just about 2.5 to 3 months ago, but it's fallen substantially throughout November and December and again in early January. So one of the number one things most Australians buy is petrol, for example. A lot of that is basically imported into Australia. It's pushing up the price of petrol relative to Australians. It's also made Aussie goods more attractive for overseas buyers. So there are people overseas looking to buy things from Australia because they get better value for the dollar, such as iron ore and other commodities like coal. But overall, a falling dollar as well, when you're travelling to other countries, it always makes it more difficult. Your dollar doesn't go as further as it has in the past. So all this kind of ties up with the whole cost of living situation that we're dealing with now. It also factors in with inflation and really it's a bit of a red flag here for the Reserve Bank of Australia. They did want the dollar to fall a little bit, but not as much as it has. I don't think they expected the Aussie dollar to be trading near 5-year lows. So yeah, it's currently around the lowest level since March 2020. Hopefully it can get back up to about at least 65 US cents, but right now it's looking pretty weak and it is causing a few problems for our economy, Holly.
It is indeed. I mean, Ed, the weaker dollar has also made Aussie businesses attractive to take over here. Investment firms in New York and Boston as well are pursuing the ASX listed Insignia Financial.
Yeah, this has been a developing story over the past couple of months. So there's two firms that are really interested in. They're now looking at the cheap Aussie dollar going, hey, these companies, we can get them at a bargain price. So Insignia Financial, it's listed on the ASX. It's a financial services business. And back in December, Bain Capital lobbed an offer to buy them out. Bain Capital, of course, are the ones that bought out Virgin Airlines a couple of years ago and have sort of rescued that airline. So we know all about them. The other firm that's interested is CC Capital Partners from New York. So Bain are from Boston, CC are from New York, and they're basically now in a bidding war to buy Insignia Financial. And just this morning, about 2 hours ago, Bain lifted its offer to about 2.9 billion Aussie dollars. So we're in a bit of a bidding war right now for Insignia Financial. This has been the big private equity takeover story that's really been ticking away throughout the Christmas break. And we'll probably get more updates in the next sort of few days. We'll see if CC Partners now come back with a counter offer because they see a lot of value in these Australian businesses which appear very cheap to them as overseas buyers because the US dollar is particularly strong and it's causing issues like this for us where big Aussie businesses can potentially be taken over overseas. Obviously, any takeover like this requires shareholder approval, it requires FIRB approval, it's going to take months, and it's just non-binding indicative offers at this stage, but this is definitely something to watch over the next couple of weeks.